Let's start with receivables management. Okay, now listen. When I say about receivables management, receivables means what? Whatever the accounts receivables you have, debtors, correct? There are three basic aspects of the management of receivables. Basic aspects means what? What you have to consider while deciding about the receivables management. The first thing is credit policy. When I say credit policy means what? Whether how many days credit should be given to your debtor. Understood? That is one part. See, every industry has their own standards. Some industries, they believe that 1 month, 2 month, 3 months credit they might give. Some industries, they give credit of 6 months. So it depends on industry to industry how many months credit it should be given to the debtors. Okay. Next thing, when I talk about the credit policy, when I say the next point is whether we should give the discount, okay, to the debtor or not, and how much discount we should give. That needs to be decided. In this whole chapter, we are going to discuss about this. Credit analysis is another aspect. First, I said credit policy. How many days credit should be given? How much discount should be given? Credit analysis. Whether the credit should be extended to a particular customer or not. I'll tell you frankly, this chapter, it becomes a bit difficult. Why? Because you have variety of sums. A single company, a firm, applying the credit policy to all the customers means what? I am going to extend my credit period from 3 months to 6 months, let's say, or 4 months. Or whether I should go from 3 months. Presently it is 3 months. I am giving them credit of 3 months. Whether I should go to 4 months, whether I should extend them to 5 months, or whether I to extend them to the 6 month. All this analysis, overall customers, for all the customers, whatever I am giving the credit is for all the customers. That is one type of sum. Another type of question is wherein you extend that credit now to particular customers. Okay, that may be the case. Whether I should reduce the credit period, that can also be the question. Means now I am giving 4 month credit. Whether I should reduce it to 3 or whether I should reduce it to 2, that is another way. So there are different types of problems what you get in receivables management. But one thing is for sure, what you have to do here is, please remember, remember this point, whatever I am saying, whatever you have to do in any sum, in every sum I should say, you have to just do the cost benefit analysis. Like we did in the capital budgeting. Okay. Otherwise the question is easy. You should see what is the cost incurred, what is the benefit we are getting. Take the cost and benefit, analyze it, get the net benefit. If you are getting the benefit, go on with the change. Or if it is a loss for you, you should not go with the change. It's like that. Okay. Next is one aspect I said credit policy. Second I said credit analysis. The third one is control over the receivables. When I say control over the receivables means what? See what happens. You have to keep the follow-up with the customers. Right now, customers, there are very rare customers who will call and who will pay you. Isn't it? Not everyone is like that. You have to call them, Arey, pay me, like that. At that time they pay you. So that is the thing. So there should be control over the receivables. The data should not get piled up. It should not be aged. The right word is aged. A-G-E-D, aged. It should not be aged. Why it should not be aged? What will happen? Can anybody tell me? What will happen if the data are aged? If it becomes obsolete? Data, can it become obsolete? Yes. Purana we say na, old one. What will happen if the company has more outdated data? Can anybody tell me? The working capital will reduce. That's one point. Very good. What's next? I want the basically what will happen to the receivables. I want the my question is related to that. It's correct. Working capital will get reduced. 100% correct. What else can happen? Won't the bad debts be more? If you're not asking for the money, people will not pay you. Simple. Okay. So these all things now we have to understand here. See, how much should be the means investment in data? Like we have seen all the other aspects of the working capital. How much should be the investment in the data? Means how much money should be tied up with the data? Neither it should be too high, neither it should be too low. When I say too high means what? Obviously, your opportunity cost will be high. Correct now? If too much of money is outside, people are not paying you. That means your money is being used by others. I hope it is clear. Your money being used by others. Correct now? So what will happen? You will not enjoy the interest. There will be opportunity cost to you. And that opportunity cost will be high if more money is outside your business. People are not paying you. Easy. As simple as that. More will be the bad debts. When more money you are delaying to receive the money, that means you are not following up them properly. Then obviously you will have the more bad debts, you will have the high interest cost. Okay, the opportunity cost will be more. I hope it is clear, everyone. Yes, done. Neither it should be too low. Means what you know, neither it should be too low means what? You're not giving credit to your customer. Your competitors are giving credit at 3 months, 4 months, 5 months, and you are saying no, I will give only 2 months credit. You will not be able to survive. Your sales will get reduced. When you give high credit period as compared to your competitor is giving 3, you say no, I will give you 5-month credit. Your sales will be high, but obviously your bad debts will also be high. But if your credit period is less, then obviously you won't have bad debts and all. Your bad debts will be less. But one thing is 100% sure, your sales will not also be high. Okay. Okay. Clear till here? So remember, when you have datas now, to maintain that receivables, you have some cost. What are those costs? One is, as I said, opportunity cost, interest on investment. Your money is being, because you are getting credit. See, if I sell you today, you should pay me today. Ideal situation. But because I am giving you the credit, you will pay me later. Whatever interest I could have earned, I am not earning. So that is my interest on investment. Right now, the first thing. Second is what? Administration cost, isn't it? Administration cost. Because you have data, you'll have to keep the records now. You'll have to keep the records. You have to, and one more thing, which I forgot to tell you, when you give the credit, you should investigate whether the customer is eligible for that credit or not. Means there are some people now, in one point, if let's say you, me and someone else, third party is there, A, B, C. So there is one person who is D. First he buys with him, don't pay to him. Then he goes and buys with him. Then he don't pay to B also. Then that D buys with C. Is it possible? Yes, he might be doing that. So you should check whether this D na, whether is how much is his credit worthiness. Okay. So administrative cost is involved. Administrative cost means what? You have to keep the records. You have to means follow up. I will not say follow up is a different point. That is called collection cost. What I say, I'll say collection cost. Or one more name is there to follow up. That is delinquency. Delinquency cost. This is all given in the notes. You have to keep the follow up. That follow up is called delinquency cost. You have to call them, you have to send the letters, you have to send the legal notices. Sometimes if they don't pay heed to your reminders, then obviously you have to what? You have to send them legal notices, and obviously it will attract some charges. So that cost is called what? Delinquency cost. Collection cost. What is collection cost? Collection cost means cost of contacting the customers. Collection means we did know that lockbox system, cash management. You remember one sum wherein your collection was delayed. So what we do? We have a box, lock box, wherein a person is appointed and he collects the bank person is appointed and he collects the payment immediately and he puts in your account. So your that flotation cost, float day, flotation day, that gets reduced, float days. We have done this sum in cash budget. I hope everybody remembers. So that collection cost is also there when you have the receivables. Then there is bad debts cost, that is called as default cost. Default cost means what? Bad debts. Okay. All these are what? Cost. Now this cost, now whatever is the cost, that will be compared with the benefit. And if that benefit is more, then you should change your policy. Otherwise, you should not change your policy. Okay. If you remember in CapBudge, what I did is, you remember a replacement of machine sum was there. I'm purposely linking these things because analysis can be done in different ways. So one thing was separate NPV method, wherein what I was doing is, if I have the old machine, if I have the new machine, what I can do is, I know the benefit, okay, or I know the cost. The benefit of the old machine is 1 lakh, the cost is 50,000. So obviously my net benefit is how much? 50,000. Old machine has a benefit of 2 lakhs, but my cost is 1.5 lakh. No, I can't take 1.5 lakh. Let's say 1 lakh. Okay, so this is 1 lakh. So obviously, where my benefit is more? Old machine or new machine? Where my benefit is more? Yes, new machine. This one is new. Okay, new machine has got me the more benefit right now. Another way to do this analysis is, how much is my incremental benefit by 1 lakh? How much is my incremental cost? 0.5 lakh. So how much is my incremental benefit? 0.5 lakh. See, the figures are different. Correct now, but analysis is what? You should choose this. You should choose go with the what? New machine, isn't it? Incremental approach. So here also we are going to follow what? Incremental only. Total approach you can do, but then the figures will be huge, time consuming. Understood? So what I will do? Incremental. How much is the increase in the benefit? I hope, is this clear what I said? Okay, great. So everyone is comfortable, right? So now let's move to one question. Okay. Question number, see this. I think we should be able to start with this. Okay, we'll do this. Question number 13. Page number is what? 168. The credit manager of the ABC company, okay, has to decide on a proposal for a liberal extension of credit. Means credit manager of the ABC company, he wants to decide whether the credit period should be extended or not, which will result in slowing process of average collection period from 1 month to 2 months. Means what? Presently they are giving a credit of 1 month. They are thinking to extend it to how many months? 2 months. Understood? Means this is extension, one type of sum. The company's product was sold for 20 per unit, okay, and of which 15 is what? Variable cost. Okay, 15 is what? Variable cost, including the credit department cost. There's one credit department who analyzes and all, so that is included in that. Okay, the current actual sales is 24 lakhs. The current sales is 24 lakhs, represented entirely by what? Credit sales. The average total cost per unit is how much? 18. When I say 18, out of this 15 is what? Out of this 15 is variable cost. So my fixed cost per unit is how much? 3 rupees presently. The relaxation in the credit policy will result in 25% increase in the sales. That is rupees 30 lakhs annually. Okay, so from 24 lakhs, my sales will increase to how much? From 24 lakhs, my sales will increase to 30 lakhs. Correct? The corporate management aimed to a return of 25% on additional investment. Can anybody tell me what is this? 25% on additional investment means what? Obviously, yes. Can anybody tell me? 25% na is my opportunity cost. Right now? See, my sales was 24 lakhs. If it increases to 30 lakhs, good. But my period is getting extended now. So my fund is getting blocked from 1 month to 2 months. So obviously I will lose the interest. That is this. I'm going very slow because it's the first sum. You are required to make a relevant calculation to help the credit manager in examining the financial implication of liberalizing the credit policy. Understood? So we have to tell them whether the period should be extended or not. So what I will do is, there are basically two approaches. Okay. So this is type 1 sum, right, in your notebook. Everyone, I hope you have written the title, receivables management. Okay, right. Type 1 sum, type 1 problem, extension of credit period, extension of credit period. There are certain steps which you have to follow. Okay, I'm not discussing what methods and all. I'm directly jumping into the sum. When we see the numbers, now it will be easy. Okay, and when you compare the two things, now it will be more easy. Fine. So question number is what? 13. Okay, question number 13. Method 1. Variable cost approach. What we will do is, first I will solve the sum. Everyone has the physical copy, right? So what you should do is, you should concentrate how I am solving the sums. Okay. I found that many students are they're not using the notation, they are using the notations, short forms. So they will cut your marks. Wherever it is rupees, now you should write. Conclusions should be included. Okay. Please be careful about this if you want to score a good marks in FM. And I always say this in the every batch, but people, they don't do it. And I got many messages this time also that, sir, because you said you emphasized on not using the notations and all, but we used and we lost the marks. They got 50, 55 or something like that, or else they would have got more marks. Who were expecting more, they could also not get. Everywhere, if it is rupees, you have to write rupees. Okay, fine. Okay, listen. So as per a conversation, I will continue the sum, then you can copy. So please help me out with the figures. We are evaluating what? Liberalization of credit policy. So I will write the heading, statement of evaluation of liberalization of credit policy. Okay, so this is my heading. The first approach, what we are doing is variable cost approach. In that, what I can do is, I'll make column, because I think from 1 month we are shifting to 2 months, so I will make only 2 columns. So particulars, and then present policy is what? 1 month. Okay, I hope till here no problem. Anyone? Proposed is what? 2 months. Okay, 1 month, 2 month. First line, you have to follow these steps. Listen, you have to follow these steps in every sum. Whatever method they solve, now let them solve. Your conclusion would be the same. Tell me the annual sales. Presently, what is the annual sales? 24 lakhs. Please concentrate. Don't write everyone. Okay, please concentrate. 24 lakhs. Proposed is how much? If I extend the credit period to 2 months, it was 30 lakhs. Correct? B. This is annual sales. Can I calculate average debtors balance? Yes. Average debtors balance. Listen. I'll crack everything. This is A multiplied by period upon 12. Okay. So A is what? A is annual sales into 1 by 12. I think it should be 2 lakhs. 24 lakhs into 1 by 12. No? Correct? Now 1 month period I am giving. Correct? So, or I can write this as, let me write it clearly so that in every sum you can apply this. Credit sales multiplied by credit period, and if it is in months you have to use 12. I hope this much to maturity we have. If it is days, then you have to use 360 or 365. Okay, so 2 lakhs. So sale was 24 lakhs into 1 by 12. 30 lakhs into 2 by 12. Yes. How much? 5 lakhs. C. Listen. Can I say, listen carefully, stepwise, ekdam relax. 2 lakhs is presently what is getting invested. Understood? But if I change the period, my investment, my money lying outside will be 5 lakh. Agree? Yes. So can I say increase in debtors balance? I said I am going to follow what? Incremental, right? Means the analysis will be on incremental basis, not the approach I am saying. Approach is variable cost and total cost. Okay, what is the difference that I will speak of? But increase in debtors balance. Now that increase is from year to year, it is how much? 3 lakhs. You understand? For your convenience, I will mark this. The difference is this 3 lakhs. Right? D. I'm preparing the base. I'm preparing the base for the further. Okay. Investment. I can say investment. Listen. Investment in increase in debtors balance. Investment in increase in debtors balance. Investment in increase in debtors balance. What I should do is increase in debtors balance multiplied by, listen. Acha, you tell me, the sales was the sales figure. Sales is on sales, na? It has cost plus profit element. I hope it is clear. Debtors, whether it is at cost or selling price. Selling price. The increase in the debtors 3 lakhs is also at the selling price. So now what I am doing is, out of that, what I believe is that full is not my investment. What is my investment is out of that only the variable cost. What? Variable cost. So if I want to remove that variable cost from that 3 lakhs, I'll have to divide that 3 lakh by the selling price and then multiply by the variable cost. Right now, check your variable cost. How much it was? I think it is 15. 15. What is your selling price? Check. 20. Is this clear? So 3 lakhs, I hope it is clear now. 3 lakhs is what? Is the debtors balance. I agree 3 lakhs is lying outside, but that is not my investment. My focus, because it is variable cost approach, what I am saying is variable cost component now. That is my investment. So 3 lakh into 15 by 20, how much it is? 2,25,000. I hope everybody is clear till here. No doubt. Okay, so let's close the window here. Let's close the window. So I'm closing the window here. Okay. So my window is closed. So first step, what it is? Annual sales. Then average debtors balance. Okay. In all the sums, the one or two steps might not be there, but you have to be comfortable that how you have to draw in that particular problem, whether that step will come or not, that you have to realize in that sum itself. But annual sales, then what? Average debtors balance. Out of that debtors, because I am following incremental, I will calculate the increase in the debtors balance. But because it is, which approach we are following? Variable cost. Which approach? Variable cost. So I think this 3 lakh is not my investment. Out of that 3 lakh, only 2,25,000, that is the variable cost, is my investment. Understood? So once I close this window, what I will do is my step E will be, understand, listen, if out of 20, 15 is my variable cost, then how much is my contribution? 5 rupees, correct now? So can I say my additional contribution I am saying, I am writing in shortcut but you don't use, okay? Additional contribution is increase in sales, right now, into contribution per unit divided by selling price per unit. I hope it is clear, right now. My increase in sales is how much? Can you tell me? My increase in sales is how much? 6 lakhs. Very good. My increase in sales, 24 and 30 lakh difference, 6 lakh. So 6 lakhs is my increase. So 6 lakhs will be multiplied by, because 20 was my selling price, out of that 15 is what? My variable cost. So 5 is what? Contribution. 6 lakhs into 5 by 20. How much it is? 1,50,000. No problem. Correct. From this, what you should do is you should deduct the F step. You should deduct the additional bad debts. What you should do? Additional bad debts. Okay. When I deduct the additional bad debts now, it gives me net additional contribution. What it gives? Net additional contribution. But in the present sum, since there is no additional bad debts, there is no bad debts. They didn't speak about the bad debts. So it's not there. So it becomes easy. What I will write is G, net additional contribution. Net additional contribution. Clear? E minus F dash 1,50,000. Understood? So what I have done is, guys, all the benefits now I will take in this first step, this here in this window. Here all my benefits are there. Then now I will make a list of all my cost and then I will deduct. That's it, done. Easy. Once again, let's close the window. Okay. In your question, there was one cost. You remember which cost? Additional. Remember which cost was there? Opportunity cost. Opportunity cost. Yes, opportunity cost was there. But before that, what I will do is I will write one more thing. Sometimes in the question there is fixed charges or there is collection charges, because you are extending the period. There is collection charges. Now you will have to collect. That charge is there, which we discussed in the theory, right? That is not given in the sum, but still I am writing it. Additional collection charges, additional collection charges and fixed cost, that is dash. Now I will write what? Additional, that opportunity cost, additional cost of investment, Listen, if you remember, here already I have made a base work. This is my investment. Agree? In variable cost approach, this is my investment right now. 2,25,000. What is the percentage given? Check. 25%. So 2,25,000 into 25% is how much? 56,250 is my cost. No other cost is there. So what I will do is I will take the total. Once again I will close the window. I will write J, additional cost. Okay, additional cost, that is H plus J. So that is minus 56,250. Once again close the window. Okay, then I will write G. After J what comes? K. net additional benefit, net additional benefit. That is, what was my contribution? G here. Net additional contribution is G minus J, G minus J. How much it is? 1,50,000 minus 56,250, 93,750. Since there is additional benefit, so I should extend my credit period from 1 month to 2 months. Okay. So after completing this, I will write what? Recommendation. What I will write? Recommendation. What is my recommendation? Recommendation is what? The proposed policy, the proposed policy of extending of extending the credit period okay, to 2 months should be implemented okay. 1 minute, let us have a deep thought. The working capital investment is for one cycle or for a year? The working capital investment is for one cycle or a year? I repeat my question. Both. This investment 2,25,000 is for one time or for a year? Both. Correct? It's a cycle, no? 2,25,000 you invested. Again it will convert into cash. Then again you will invest. It will keep on going, right? This investment is per annum as well as it is what? It is for the cycle. This one line, many times in the question, this itself will be a doubt for you. Understood? Many times means before the practice and all, whoever done this in the before exams, okay, this might be a doubt also. Sometimes they are taking annual, sometimes they are taking period wise. No, it's always, this is, if someone says, na sir, you multiplied it with period, that is annual sales. When period is, the investment is for period only, working capital is for that cycle. This we have already discussed in working capital, isn't it? So that 3 lakh is increase in the debtors balance for cycle, and this 2,25,000 is investment for what? Cycle as well as for what? Year. This 6 lakh, why I am focusing? Because later you will have a doubt. This 6 lakh, isn't it annual? It's annual. So this 1,50,000 is what? Annual. Obviously, this 2,25,000 is what? Annual. On that 25%, 56,250 is also annual, my dear friends. So this 93,750 is also the annual benefit you will get. Is this clear? Great. I'm loving it. Please copy. Take your own time. Don't worry. Be happy. Done? Listen. And the previous one, what I did is, I'm again repeating, this investment is for what? Is for year, not for that period. Okay. As well as this contribution, everything is, this is annual. This is annual. This all is what? Annual. Okay. So don't get confused about these things. So in previous sum, what I took investment was what? Variable cost is my investment. I hope it is clear. Correct now? So variable cost was my investment. Now what I will do is, I will follow COGS, wherein total cost will be my investment. That is what I'm assuming. So method 2. This time you can do it with me. Method 2. Right. COGS approach. COGS approach. Oblique total approach. Oblique total approach. COGS approach or total approach. Okay. Make a table. Two columns. Okay. COGS, let's start. I've made two columns. Okay. So I'll write particulars. Second one is what? This one is present. Presently we are having 1 month credit policy. Proposed is what? 2-month credit policy. Total quantity produced. Total quantity produced. Can you tell me what is the quantity produced? How much was the sales? 24 lakh divided by selling price is how much? 20. And now the 30 lakhs divided by 20. Okay. So presently the sale quantity produced is how much? 1 lakh 20,000. 30 lakhs divided by 20. 1 lakh 50,000. Okay. Variable cost. Rupees 15 per unit. 15 multiplied by 1 lakh 20,000. How much? 18 lakhs. 15 multiplied by 1 lakh 50,000. I'm calculating the total cost. Okay. 22 lakh 50,000. Right now. Fixed cost. Fixed cost is how much? My selling price was 20, na? 3 per unit, na? Is the total cost given? How much is the total cost? Is it given? Check. 18. Okay, rupees 18 minus rupees 15. So that is equals to rupees 3 per unit, correct? 3 into 1 lakh 20 is 3 lakh 60,000. Will it 3 multiplied by 1 lakh 50,000 or will it remain same? It will remain same, 3 lakh 60,000. Okay, as simple as that. So this is my total cost. My total cost is, here it is 21 lakh 60,000 presently, and here it will be 26 lakh 10,000, I think. Check. Here also first I will try to what? Try to calculate the investment. Okay, increase in investment. Done till here? Okay. Proposed investment in data. Listen. Proposed investment in data. So this is full year cost, correct? So proposed investment is 26 lakhs 10,000 multiplied by 2 by 12. How much it is? 26 lakh 10,000 to 2 by 12. 26 lakh 10,000 is for annum. 2 by 12 for 2 months. How much it is? 4 lakh 35,000. Present investment in data 21 lakh 60,000 into 1 by 12, 1 lakh 80,000. Increase in investment is how much? 3 lakh 2 lakh 55. Okay, problem. Let's close the window. Copy. Is it clear till here? The first step is to calculate the increase in the investment. That's it. So done. We'll move ahead. We move. Additional contribution. Same. 6 lakhs was additional sales into 5 by 20. Correct. How much is my additional contribution? 1 lakh 50,000. After 1 lakh additional contribution, what I wrote? B minus additional bad debts. Is there any bad debts in this sum? No. So dash. Close the window. Net additional contribution. 1,50,000. Please copy. Same way I am doing. That's it. Nothing is different. Close the window again. Next step was what? After this, additional collection charges and fixed cost, right? Nothing is there. Additional cost of investment. This time, how much is my investment increase? 2 lakh 55,000. On that, 25%, correct? 2 lakh 55,000 to 25%. 63,750. Wow. Close the window. F. Additional cost. D plus E. 63,750. Close the window. G. Net additional benefit. That is C minus F. 1,50,000 minus 63,750. How much it is? 86,250. Done. Good. Recommendation. Refer previous note. In exam, you should not write like this. You should write full. Okay. And I am telling you, don't write refer previous note. Otherwise, you will have to come to your home, refer your book. Done. Please copy. Debtors turnover ratio. Debtors turnover ratio. Tell me the formula. Debtors turnover ratio is equals to 365 divided by average collection period, right? Right now, debtors turnover is this. What is the formula for average collection period? Yes, 365 divided by debtors turnover, isn't it? Correct? Right now, we had some formula on average for average collection period. One more formula was there. What was it? Credit sales by average debtors, average receivables, right? Correct now? So ultimately, see, understand. What I can do is, please understand this. Average collection period is 365. Okay. So you people can copy this. Just copy this thing. Why I am giving you this is because in the next sum, you will have to use this. Done? Come to question number. Okay, I was saying which approach to follow, whether variable cost or total cost. If nothing is given, any approach can be followed. Okay, that is the thing. So we'll do one more sums and then there is MTP November 2020 question. Okay, XYZ Limited, okay, is considering relaxing its credit policy. XYZ Limited is a corporation is considering relaxing its credit policy, and in the process of evaluation, okay, in the process of evaluating the two proposed policies, currently the firm has annual credit sales of 50 lakhs and account receivable turnover is of 4 times a year. The current level of loss due to bad debts is 1,50,000. Current bad debts is how much? 1,50,000. So please understand, 50 lakhs is the sales. They have not given us the collection period. What they have given us is turnover. Understood? So if you know the turnover, can you calculate the average collection period? Check the formula what is given. What you have to do? I've given the formula, no? I want average collection period. So if I know the data's turnover ratio, what I will do? 365 divided by data's turnover, no? That's it. Correct? So I will get average collection period. Right? So what I can do is, because the data's turnover is given, is it clear? In the previous question, they clearly mentioned you for how much means what was the collection period. Right now, credit period was given, here it is not given. Good morning. So 4 times is the receivables turnover. The current level, currently the bad debts is 1,50,000. The firm is required 25% on the investment in the account receivable. This is your opportunity cost, 25%. The company's variable cost is how much? 70%. Okay, of the selling price. Given the following, which is the better option? Presently the sale is 50, account turnover, receivable turnover is 4 times, bad debt loss is this much. Option 1 is, the if you have the turnover ratio of 3, and the turnover ratio will go down, your average collection period will increase. You understand this? 360 divided by 4. If I assume 360 days, 360 divided by 4 will be 90 days average collection period. 360 divided by 3 will be how much? 120 days. You understand? The collection extension of credit period is going on. I hope it is clear. Correct? 360 divided by 2.4. How much is the answer? 360 divided by 2.4. 150 days. Understood? 150 days. Is this clear? Okay. 90, 120 and 150. Okay, fine. Great. So in this sum only extra information has come, that is bad debt losses. Okay. So we'll have to deal with that. Fine. So what I will do is, first I will make a note for first I will make a working note. Okay. So what I will do is, listen. In fact, no need of working note also, but still, okay, we can do it. Working note number 1. Assumption. Assume 1 year is equals to 360 days, because I don't want that decimals and all. Okay, listen, then you can copy. Average collection period is equals to 360 divided by debtors turnover. Debtors turnover. So present, option 1, whatever they have given, that only you have to use, proposed or option. Whatever the word they are using, use the same word. Option 2. Average collection period is equals to, presently how much it is? Debtors turnover is 4. So 360 divided by 4 will be 90 days. Okay. 360 divided by 3 na will be 120 days. 360 divided by 2.4, I think, right? So it was 150 days. Yes, great. Okay. Bad debts, bad debts. I will write simultaneously bad debts. Currently bad debts is how much? 1,50,000. Next option is how much? 3 lakhs. Next option is how much? 4,50,000. So listen carefully. From here I can move to here, or from here I can move to here. Okay, so increase in bad debts, increase in bad debts, increase in bad debts. 1,50,000. Are you understanding why I am writing 1,50,000? This gap, this is 1,50,000. Correct? And this gap is how much? 3 lakhs. Understood? Sometimes when they go to the question, the students feel that I have taken only these two figures. No, boss, I have taken the increase. They don't understand why I have left the last. I have not left the last. I am taking the difference, because incremental approach we are following in calculation. Okay. So increase in bad debts. Copy this. Have you copied? Copy, copy. Take your own time. Is it completed? Yes. Okay. Now let's start. Okay. Now we will make what statement. You can also start with me. Three columns are this time. Which approach we will follow? Total cost or variable cost? My question is which approach we will follow? Total cost or variable cost? Why variable cost? Can we follow total cost? Information is not available only. Information is not available. Okay. So we can't do that. They have only said that variable cost is how much? Variable cost is 70%. That's it. There's no other information. Understand it. I'll write statement showing evaluation of credit policy in bracket you can write variable cost approach. Particulars present. It was 90 days, na? Option 1, option 2, 120 days, 150 days. Please make a table. Done? Let's start. What is the first step? What I should write? Yes, anyone? Sales or annual sales? Annual sales. Yes, annual sales. How much is the annual sales? Presently, 50 lakhs. Next is how much? 60 lakhs. 67 lakh 50,000, right? B. After annual sales, average debtors balance. है ना? Average debtors balance. How that I will get? Annual sales, credit sales multiplied by credit period. Correct? 90 for the first one. Divide by 360. I have assumed 360 days. So 50 lakh into 90 by 360. Please copy and give me the answers. 12 lakh 50,000. 60 lakhs into 120 divided by 360. 20 lakhs. 28 lakh. 500. C. Please copy this. Let's go slow. Please be with me. Try to do the sums. Very important chapter. Sometimes you get 2 questions also from this. Next step is what? Increase in debtors balance. Increase in debtors balance. The difference of this two will come here. Okay. And the difference of this two will come here. Tell me how much it is. 7 lakh 50,000. Oh, sorry. I've put this dash here. 7 lakh 50,000. And 12 lakh 50, 18 lakh, 28 lakh 12,500 is 15 lakh 62,500, right? 12 lakh 50 minus 28 lakh 12,500. Increase in the debtors balance. 62,500. B. What is the next step? Increase in investment. Increase in investment in debtors. Increase in investment in debtors balance. That is C multiplied by how much percent? 25. No, not 25. Sorry. How much is the variable cost? 70%. Clearly it is given 70% is variable cost, means 70% is my investment, right? Dash. So 7 lakh 50,000 into 70%. 5 lakh 25,000. 15 lakh 62,500 into 70%. 10 lakh 93,750. 93,750. What's the next job? Close the window. What is the next step? Have you done till here? I hope I'm not in haste. Correct? Everyone is with me. Yes. E. Additional what? Additional contribution. How much is the contribution? Increase in sales multiplied by contribution per not given into 30%. Every sum it will not be same. Increase in sales. How much is the increase in sales? 10 lakhs. 50 minus 60. See above. 10 lakhs. 10 lakhs into 30% is how much? 3 lakhs. Okay. Then 17 lakh 50,000 into 30% is how much? 5 lakh 25,000 minus F. Additional bad debts. Was there any additional bad debts? Yes, we have already done. Working note number 1. 1 lakh 50,000. This is minus and 3 lakhs. Net additional contribution. E minus F. 1 lakh 50,000. 2 lakh 25,000, right? Again, close the window. H. What is this step? Additional collection charges and fixed cost. Okay. Additional collection charges and fixed cost. Dash. 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 There was no fixed cost given. Correct? Now, additional fixed cost was not there. Specifically, they will mention that additional fixed cost will increase. That you have to take. Is that clear? Additional cost of investment. Additional cost of investment. Which point it was? D na? D multiplied by 25%. D multiplied by 25%. So D 5,25,000 multiplied by 25%. How much? 1,31,250. 10,93,750 into 25%. Yes. 5,25,000 into 25%. Yeah, correct. 1,31,250. 10,93,750 into 25%. 2,73,438. Wow. Your calci and my calci is matching. J. Next. Total additional cost. H plus I. 1,31,250. 2,73,438. Net additional benefit. Public loss in bracket. 1,50,000 minus 1,31,250. 18,750. 2,25,000 minus 2,73,438. 48,438. Done. Sum is over. Recommendation. Easy, isn't it? How's the chapter? Till this point easy. Further also it will be easy. Don't worry. Recommendation. Option 1 is better. Option 1 is better. Okay. Option 1 is better because it has positive benefit. No? Come to question number 15. Slow payers are regular customers of Good Dealers Limited. Slow payers are regular customers of Good Dealers Limited, Calcutta, and have approached the seller for extension of a credit facility for enabling them to purchase the goods from Good Dealers Limited. On analysis of past performance on the basis of the information supplied to the following pattern of payment, schedule emerges in regard to slow payers. Now here if you see the change in the question, slow payer is one customer. They are not talking about the whole. The analysis is about the whole one customer. And he has said this approach the seller for the extension of that customer has approached for extension of credit policy, credit facility. This is the pattern of the past sales. That means whatever is the bill outstanding, out of that 50%, slow payer pays us within 30 days. 34% pays within 60 days. Slow payer will pay to us. 30% of his bill, whatever is outstanding, he pays in 90 days. This is past analysis. 20% of the bill he pays in 100 days. 1% is bad debts. Slow payer wants to enter into a firm commitment for purchase of goods of 15 lakhs in 1987. I don't know why they have given this. I have not changed the question. Deliveries to be made in equal quantities on the first day of the each quarter. He wants to make a firm commitment, slow payer. How much? 15 lakhs. Deliveries how? In equal quantity on the first day of each quarter in a calendar year. The price per unit is 150, on which 5 rupees profit is expected to be made. It is anticipated that Good Dealers Limited that taking up this contract would mean an extra recurring expenditure of 5,000. Can you tell me where I should write this extra 5,000? Collection charges, collection and fixed cost additional we write now and there. If the opportunity cost of the fund is 24%, would you as a finance manager of the seller recommend the grant of the credit to slow payers? Working should form part of your answer. Okay. So what they are saying is they are going to make a firm commitment of purchase of how much? 15 lakhs in equal quantities on the first day, means every quarter. Okay. So every quarter they want to buy. In this question, what is the difference? You know, the difference is the calculation of the average debtors balance. Can anybody tell me how we will calculate the average debtors balance? How we will calculate the average debtors balance? Because sales is 15 lakhs, that is clear. Okay. Easy. 15 lakhs is annual sales. Out of that 15% will be paid within how many days? 30 days. So that is debtors balance. No? 15 lakhs into 15% into 30 divided by 360. This is one debtors balance. Correct. Again 15 lakh into what? 34% into 60 by 360. Correct. Like this. We'll keep on doing this. Is that clear? And that totally is what? Average debtors. That totally is what? Average debtors. Is it clear? This is the only difference. Okay. So please help me out. Question number is what? Question number 16. First what I will write? Average debtors balance. $15 lakhs into 15% into 30 by 360. 15 lakhs. Please give me the figures. To 34% into 60 by 360. First one, how much it is? 18,750. Next one, 85,000. 15 lakhs into 30% into 90 by 360. 15 lakhs into, next is how much percentage? 20%. 20 or 21? We will take 21. Bad debt should also be considered. Understood? We will not consider this as bad debts, no. It is debtors balance we are calculating. So we will not take 20. That 1% should be included. How much it is? 21%. 87,500. Total. Total is how much? 3,03,750. Please copy. Okay, next step. Now let's start the evaluation. Statement showing evaluation. Okay, statement showing evaluation of, we are going to extend him credit, na, extension of credit policy. This is not like the previous sum, correct? Why? Because there is only one customer we are talking about. So it will be particulars and then rupees. Okay, please make table. First point remains same. Annual what? Sales. Annual sales is how much? 15 lakhs. Average debtors balance 3,03,750. So done, please let me know. Can we take increase in debtors balance now? No. You have to understand it. Directly what we will do? Investment. Investment in average debtors balance. 3,03,750 into 145 by 150. Correct now? Why I took 145? 5 is very this profit. Correct? What is the answer? 625. Is this clear, everyone? 5 is the profit. Just check in the question. In this question, what is the profit? 5 per unit profit. So 145 is the cost. Close the window. D. Next step is what? Additional contribution. This 15 lakhs na, 15 lakhs itself is what? Additional sales. This itself is additional sales. Can you understand? Yes or no? Is there any additional sales? 15 lakhs is what they want to have, na, firm commitment. See here. Wants to enter. Slow payers wants to enter into a firm commitment for the purchase of what? Goods. In what? 15 lakhs. Okay. 15 lakhs. So that is additional sales. 15 lakhs is additional sales. Into 5 divided by selling price is how much? 150. Therefore, the sum becomes difficult. Every sum will not be the same. 50,000 is the answer. Less. Is there any additional bad debts? Yes, there is additional bad debts. It was given. How much? 1%. 15 lakhs into 1%. Correct? 15,000. Net additional contribution 35,000. Window close. G. Additional collection charges and fixed cost. Was there was any something, no? What was that? 5,000. It was there. Yeah, 5,000 was there. Anything else is there? Additional cost of investment 2,93,625 multiplied by what is the rate? 24%, I think. Yes. Okay, please copy. I am getting 70,470. 70,470. Complete the sum. 30,470 minus 40,470 is minus. Easy now, isn't it? Very easy. Okay. Only the first part was different. How to calculate the average debtors balance. Otherwise, the sum is same. whoever practices receivables management, there are ample of sums given in the practice book, right? You have to practice it. Okay, should we conclude? Since there is a loss of 40,740, loss of rupees 40,740, since there is a loss of rupees 40,740, the offer of the offer of slow payers, the offer of slow payers to enter into firm commitment, to enter into firm commitment. I repeat, since there is a loss of rupees 40,740 colon semicolon, the offer of slow payers to enter into firm commitment should not be accepted. Any idea how to try this? Question number 19. How to do it? May 2020 RTP. Recent question. November 18 RTP. 1992 it was asked last time. P2. Let's read it. Star Limited, manufacturer of color TV set, are considering the liberalization of existing credit terms to the three of their large customer. Means the Star Limited, they are manufacturer of what? TV set, and they are considering what? The liberalization of existing credit terms to the three large customers A, B, C. The credit period and the likely quantity of TV set that will be lifted by the customers are as follows. If 0 days credit period is given, A will take 1000, B will also take 1000, C will not take. If 30 days credit is given, A will take 1000, B will take 1500, C will not take. 60 days, A will take 1000, B will take 2000, C will take 1000. Likewise, it is given. For 90 days also it is given. The selling price of the TV set is how much? 9,000. Expected contribution is how much? 20% of the selling price. Cost of carrying debtors average 20%. What does this mean? Cost of carrying debtors average. Opportunity cost. Whatever is the debtors investment of that 20% is interest cost. Determine the credit period to be allowed to each customer. Assume 360 days in a year for calculation purpose. What other problems company might face in allowing the credit period as mentioned in A above. So let us tackle the B part later. But what about the A part? For the A part, For A, how much credit should be given? Why 0? He is only buying 1000 quantity. She is correct. He is buying only 1000 quantity, irrespective of the credit period given. Correct na? So what we will do? We will not give him any credit period. Right na? Will not give him any credit. Is that clear? But then for B, what we will do? Then for B, you will have to calculate. B, you will have to calculate now. You can get the sales for 1000 unit. You can get the sales for 1500 unit. You can get the sales for 2000. You can get the sales for 2500. Understood? Let's go slow. Let's go slow. For A, it is not required. For B and C, the calculation is same. Okay. One more thing, what I want to tell you is, I'll tell later. First, let us start. Right. Question number 19. Right. Question number 19. Customer wise evaluation. Customer wise evaluation. Customer wise evaluation. A. In that A part, customer A. First part, A I'm answering. Right. Irrespective. After writing customer A, right. Irrespective of credit period allowed. Irrespective of credit period allowed. Irrespective of credit period allowed. This customer buys. This customer buys. Definite. This customer buys. Definite. Quantity of TV sets. This customer buys. Definite quantity of TV sets. Full stop. Therefore, comma. Credit period should not be allowed. Credit period should not be allowed to customer A. Credit period should not be allowed to customer A. Done. B. Customer B. Customer B. Not B part, it is under A part only, na? Customer B. What I will do is, I'll make columns. Four columns. Why? Because there were four options, na? Particulars. First option was 0 days. Next option is 30 days, 60 days, and then 90 days. Correct? Yes. Any question? For customer B, I am calculating. What happened? Can you tell me the annual sales? How you will get it? Units multiplied by selling price. Please calculate, complete it, make the table. Please do it. Annual sales, how much? 90 lakhs. Units you have to multiply with selling price. Next is 1 crore 35 lakhs. Next is 1 crore 80 lakhs. Next is 2 crore 25 lakhs. After this, B point is what? Average debtors balance. Correct? Average debtors balance. That how we do? Sales multiplied by credit period divided by 360. So 90 lakhs into 0 by 360 is 0. 11 lakh 25,000. Correct? 30 lakhs. Next 56 lakh 25,000. C point is what? Yes, I knew everyone will do this. Therefore, I gave the sum. There's no increase in debtors balance. You understand, they are all individual. Whether we should give 0 days or 30 days or 60 days or 90 days. There's no increase. Means other way also, if you calculate from year to year, it will be 11 lakh 25 only. Means I agree, the figures will be the same. But if you say increase in debtors balance, then it is wrong. You understand? I hope you understand this. Was the present policy 0? Was the present policy 0? Credit policy? No. Did they say that? No. So directly, I hope it is clear what I am saying. Sure, no? So investment in debtors directly. Investment in debtors is what? B multiplied by how much is investment? Is it given? How much is the variable cost? 80%. So B into 80%. 0 into 80% is 0. I hope it is clear here. No need to take the increase in the debtors balance. Why? Because it is not present versus the option 1, 2. Okay. Here it is how much? 9 lakhs. 30 lakhs into 80, 24 lakhs. 3 8s are 24. 56 lakh 25 into 80, 45. 45 lakhs. Window close. Everyone got this? D. Additional contribution. There were no additional. Why I am writing additional? Additional not. Only contribution. Correct now? Contribution. How much is contribution? Sales multiplied by 20%. Correct? Sales multiplied by 90 lakhs into 20%. How much? 18 lakhs. Correct now? 1 crore 35 lakhs into 20%. 27 lakhs. 1 crore 80. 36 lakhs. 2 crore 25. 20. 45 lakhs. Right? Did they say anything about the bad debts? No bad debts. Dash, 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 dash. In the same line the sums is going. Means I am not changing a single line. You are doing the same thing. Okay. Close the window. F. Net. Additional or net contribution, not additional. Net contribution. E minus E. 18 lakhs. 27 lakhs. 36 lakhs. 45 lakhs. Close the window again. G. Was there any additional cost or something like that? Fixed cost? Collection charges? Collection charge and fixed cost is not there. Dash, 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 dash. H. Cost of funds. Cost of investment. Cost of investment is what? C multiplied by how much is the investment? 20%, no? Opportunity cost. So 0. Next is what? 1 crore, 1 lakh 80,000. 9 lakhs into 20%. 4 lakh 80,000. 24 lakhs into 20%. 9 lakhs. 45 lakhs into 20%. 9 lakhs. Close. I. Total cost. G plus I. G plus H. 0. 1,80,000, 4,80,000, 9 lakhs. Next, J, net gain or loss. Net gain or loss. Here it is 18 lakhs, right? 27 minus 1,80,000. I should put bracket here. I should put bracket to all this, na? So 27 lakh minus 1,80,000, 25 lakh, 20,000. 36 lakhs minus 4, 32, 32, 31 lakh 20,000. 45 lakh minus 9, 36 lakhs. Correct? Is it clear? Recommendation. Star Limited should allow how many days credit? 90 days credit, na? 90 days credit to customer B. To customer B. Understood? I hope it is clear how to do it. Same you have to do for customer C. Same you have to do for customer C. But for customer C, how many columns you will have? Only two columns, na? 60 and 90. Correct? Have you done till here? I hope I'm not fast. Everyone is there with me, right? Right, customer C. Okay, what is the annual sales? Customer C, 90 lakhs. And 90 days, 1 crore 35 lakhs. Average debtors balance, 10 lakhs, 33 lakhs 75,000. Correct? 90 lakhs into 60 by 360 and 1 crore 35 lakhs into 90 by 360. Correct? Investment, 80% of this will be 12 lakhs. 33 lakhs 75,000 into 12%. Sorry, 80%. 27 lakhs. Okay. Contribution, sales ka 20% will be how much? 18 lakhs. B, E. Bad debts is in there. Here 20% of 1 crore 35 lakhs will be 27 lakhs. 18 lakhs, 27 lakhs, 12 lakhs into 20% is 2 lakh 40,000. 27 lakhs into 3% is 5 lakh 40,000. Lakh 60,000 and 21 lakh 1,000. What's your recommendation? Recommendation. Star Limited should allow 90 days credit to C. For B, how many days we allowed? 90 days. So to summarize, we are saying A, 0 days credit, B, 90 days credit, C, 90 days credit. Correct? Done? Everyone? B question. What are the problems the company might face in allowing credit period as allowed in determined in A above? A we said na, 0 to the A. Correct? 0 to A and 90 days credit. Correct? What will be the problem they are asking? What will be the problem? They won't get the money. Then what we should do? No. Yes, she has done the question. He has B for 90 days. How many he is purchasing units? 2,500. For C, he is purchasing how much? 1,500. Understood? So B will ask for more days, na? You're giving C also the same for less units. So B will say, I to buy more. Correct? If I'm buying more, I need more than 90 days credit, isn't it? One more thing, customer A will also say, you're giving credit to B and C. Why you're not giving credit to me? You understand? Right? The company, B part, the company might face two problems. Might face two problems. Good observations, Spurti. First bullet, customer A might ask for 90 days credit, which is allowed to customer, which is allowed to customer B and C, which is allowed to customer B and C. Customer B might ask, customer B might ask for additional credit, period, for additional credit period, because as compared to customer C, as compared to customer C, B purchases more units of TV. He purchases more units of TV sets, at 90 days credit. I hope it is clear what I am saying. B purchases 2500, C purchases less than that. So B will say, no, I want more than that credit period, not 90 days. Because anyway, C and B are at par, no? So this is the problem what will come up, okay? Right, extra question. Give solution to above. Give solution to above. Give solution to above. What is the solution? Yes, now we will see whose brain works. Come on. This is not given in the book also. I am asking. Give solution to the above. What we will do? Credit based on number of units purchased will not solve the problem. That means you are saying that B should be extended with the credit period. It will not work, right? Since customer A, since customer A makes prompt payment, since customer A makes prompt payment, he should be given cash discount. Agree or not? Yes. If we give him cash discount, he will make a prompt payment now, because because anyways he is making a prompt payment. The company should allow, B point. This is not given in the question. This is extra what I am giving. The company should allow trade discount. Okay, to customer B, because he is buying bulk, na? Customer B, since he purchases in bulk quantity. Since he purchases in bulk quantity. Okay, we'll stop here.